Hi there, this is Steve Murray, the market chartist on behalf of forextraders.com, and we're now going to take a look at the US dollar versus the Canadian dollar and also the US dollar versus the Japanese yen as we move now into the second half of March. Well, critically, US dollar weakness has resurfaced in here over the past few sessions since really the FOMC March meeting, in which they hiked rates, but a perception of a more dovish tone in here, not as hawkish as we'd anticipated, has seen the US dollar lose ground against many of the major G10, G8 currencies in here. So significantly here, dollar CAD lower and dollar yen lower, and that's kind of rejected the previous rally. So we had rallies from late February for the US dollar against most currencies, as we saw a potentially more hawkish stance with the various Fed members indicating potential for a more hawkish theme. So certainly that propelled the dollar higher. The setback that we've seen in here post FOMC on Wednesday the 15th March certainly leaves a more negative bias here. For dollar CAD, we're looking at here initially, so still a range environment, 129.65 and 135.98 defining that range, the peak from December and the low here from late January. However, within that range environment, the market had looked to push above 135.98 for potentially more bullish tone, but that sell-off that we saw in here, leaving a negative bias really going into the second half of March, into this week, and looking for a pushback down maybe to the lower part of that broader range environment into this week. Similar story for dollar yen in here. Dollar yen we see having a defined range in here between retracement support standing at 111.58, which had held above this important support at 111.32, capped off here by 115.63. The rally again from February into early March on anticipation of a more hawkish Fed, failing ahead of 115.63 and significantly lower Wednesday, Thursday, Friday post Fed March meeting, the Fed March meeting on Wednesday 15th. That sell-off in there, shifting the risk, not necessarily aggressively bearish, but within the range environment, dismissing a push for now above 115.63, and certainly threat really now back towards the bottom end of the range, maybe closer to these 111.58, 111.32 targets. This has been Steve Murray, the market chartist on behalf of forextraders.com, and I wish you a great trading week.